Everybody is worried about the Great Depression. A lot of people are talking about it in the news as well as on blogs and at YouTube, of course. I have spent a lot of my life thinking and talking about the Great Depression. My grandfather told me to please try to understand how the Great Depression happened and how to get out of it so we can avoid having the same problems that he went through back then. Obviously, we have chosen as a group to not pay attention to the Great Depression or to pretend it was a unique thing rather than a rather common event that happens in cycles in history. One of the things that we are particularly having problems with right now is understanding the difference between credit and wealth, as well as capital and wealth. Each of these things are individual and different. For example, if you have a big credit line, you are not rich because of it. If you use it, you will become entangled within the banking system in such a way that you will lose wealth unless you find some way to speculate with this debt and make it grow faster than the payments you owe on the debts. This is called speculation, of course. This is what drives stock markets as well as equity markets such as real estate or fine artwork or any number of things that we choose to value higher and higher via bidding. We don't bid on food when we go to the store. We buy it at whatever price that's set. But with artwork and real estate and other things, we actually bid against each other to see what price is the ultimate price. To do this, we need to have a lot of excess money. And this money oftentimes is money that we borrow. We call them mortgages, for example. And this money allows things to grow very fast when there's a lot of credit flowing. When credit crashes, this all disappears. Nobody's bidding for anything, and so the value of things drop. Let's look at the Great Depression and see how this works. This is a chart showing the stock market from 1929 until 1933. As we can see, in September and October of 1929 it crashed, but then it had its natural rebound. This happens every time with a market. We had this happen recently with our own markets. And people think happy days are here again, but they're not. And then the market begins a long grinding decline. For example, there's a peak here in 1931, which was due to the fact that work on Hoover Dam began at that point. Always, government projects, government attempts to spend money, and government initiatives create these little bumps during downturns. They don't stop the downturn, but at least it gives people the illusion that things are going well. Despite Hoover Dam being the biggest dam on Earth at this point, it didn't stop the crash of the stock market. Things went from bad to worse. At the very bottom in 1932, all the banks were collapsing, but the stock market shot upwards because people were filled with enthusiasm and hope for the future because of FDR being elected president. But as he grappled with the difficulties of the Great Depression, this feeling of good times began to fade, even though he was not yet in office. We saw this with Obama. People became more and more distressed as he tried to have an effect on things while he was still not in office. Then suddenly we had this huge surge on March 1933. One of the first things that Roosevelt did when he entered office that March, and by the way, it used to be in March that the president would take over. There was a longer period between winning an election and taking over back then. He started the FDIC, which guaranteed everybody's deposits in banks, and so that stopped the run on the banks and got everybody very enthusiastic that the worst was over. He also did dam building, seeing that the Hoover Dam made the stock market go up significantly. Perhaps doing other dams would do this too. These public work projects were very important to all of the major nations during the Great Depression. Germany, for example, started building the autobahns. Dams, roads, and railroads were all very popular choices. There was no longer credit for speculation due to the collapse in the asset value of things that people used to get loans. On the other hand, people were offering credit during the Great Depression. That was the merchants. Anyone who was selling a service or anything at all was more than willing to bankroll somebody's purchases if they possibly could. And the amounts that they were charging were very, very low, much lower than during the 1920s. I have a bunch of ads from Camden, New Jersey from the Great Depression, starting with before the Depression in 1928 and going all the way up until 1933. And we can see how lending continued, but prices collapsed and the number of customers collapsed too due to job insecurity. This is from 1927. $2 down, you could buy a $40 suit and then go to Wall Street and become rich. A lot of people did this. By 1931, you could buy a radio for 50 cents a week. Before the Great Depression, radios were going for a lot more, and the radio stock shot through the roof. It was one of the biggest stocks. Here we see distress. Auto owners had to refinance their auto loans because they were in so much trouble. They needed to use this as collateral. Women were forced into the market because the manufacturing was down, but they could get jobs typing, and so learning how to type took off, and you could rent a typewriter. And here we see glasses on credit. It costs the same amount as a radio, and this is something that you need to survive, so they could charge that. Then this was all fixed with World War II. We then got to save money with war bonds. Instead of buying things, the government bought everything. And markets became government-oriented. This was not free enterprise at all. This is a common solution to financial problems, is to have major wars. This is why people worry about Great Depressions. They do not end quietly. They usually end with a loud bang. And here we see superheroes selling war bonds and people clamoring to buy them because they now have jobs. And it's all about job security. It's not about getting a loan or buying something. It's about being able to go to work every day and get a regular paycheck and be able to meet your obligations and pay your bills. This week, Forbes magazine had this obnoxious article about how we are carrying pitchforks and terrorizing the rich. Oh, isn't this just awful? And the rich are the ones who will save us. After all, look how he's working. This man is working hard, isn't he? The servant's giving him money and he's laying there in his chair. But it says here, we're barbarians. And these guys, who are the people I call gnomes, the banking gnomes, who created this entire problem, crashed world markets, destroyed credit, and made it impossible for people to work. Well, they're better educated than us, and they're much more well off, and they're well born. Note that. They are born to the manor. And even though they got us in this mess, they'll be the ones who will get us out. Unfortunately, the only tool they seem to know to use is war. And that's why wars are increasing, not decreasing, as we get in increasing financial trouble.